Hello everybody and welcome back. Well, it's not often in our trading and investing careers we see such a massive sell-off. That was one that hasn't happened now in quite a few years. And if you're new to the market since the pandemic, you may never have seen a sell-off that brutal. It's filled certain gaps and it could have just flushed out a lot of buyers. So let's talk right now about the markets across the world, including stocks, commodities, and cryptos. See you soon. There's a lot to discuss. Well, welcome back everybody to the channel where we cover stocks, commodities, and cryptos on the daily. This is for the market closed 18th of May 2022, and what a crazy day it was. Fear and greed index hit a new extreme fear 9. That's almost the lowest it's been recently. We also saw Tesla getting kicked out of the ESG SP500 index, with Elon Musk calling it an outrageous scam. And pretty much this is another blow to, unfortunately, Tesla's stock, though it's not the biggest deal. It's still kind of another hit that they really don't need at this stage, especially with everything else that's been going on. Let's talk about the day overall, though. It was red. I mean, there was nothing here that was safe, but most surprisingly, it was actually consumer defensives that were getting hit around. Target's earnings missed hard, and we'll take a look at that later because it's very important to understand that this is the American consumer not doing well. The American consumer is really doing poorly in a lot of this stock market, and that kind of feeds through, and that's part of the reason why I think we flash crashed. But it also could be a flush out, and we'll talk about that soon. The market dropped all the way through the session. Most interestingly, the smaller caps, the Russell 2000, held better than things like the Nasdaq and the SP 500 that were down very hard for the day. And if we look at the sectors, it tells almost a totally different tale. Utilities, barely down. Solar, almost flat. And then we have the staples. XLP, one of the best sectors for the year so far, taking a massive nosedive. No doubt a lot of money floating out of there, and XLY coming with it as well. The American consumer, as we said, not feeling so good or healthy at this stage. Now, these are pretty rare kind of days. You'll notice here the years broken down now from 1928 all the way to 2022, and you'll see how many over 3% days you actually get. Not that many. Now, 2020 was well known for it. You can see how many there were. 2022 so far, we've had 4 already. And in 2018, look at this, we only had a total of 5. So we're starting to get into the territory where this market is so violent, so wild, that it's going back to many of the great bear markets in terms of, really looking recessionary in some ways. We knew the market would come up. We knew the market would rally. What we didn't know was it would drop at that exact point. We thought it might have a few more points in it, maybe an extra % before dropping off. That 41.50 was one of the targets. The other thing we know about midterm election years is that they actually tend to make a new low later on in the year. So whether this accumulates, which we'll talk about a little bit later, and whether this finds bounces, don't discount the rest of the year from the potential of another drop. Intra years, especially late in the midterms, tend to be very aggressive. But the stat after them, it's very bullish, and hopefully that is what actually is coming for the American market, because things are starting to look scary for many people out there. Let's have a look at what happens during general busts as well. So this is the 2008, obviously, financial crisis, and we can see here the way that the market busted. It generally fell heavily. It would find a base. It would rally, which is what we said over the last 24 hours, and then it would fall and get a nosedive in it. Now, these types of big fall reactions tend to happen really in the midst of the big falls, which is kind of where, in some ways, we are with this market. What we're looking for at this stage, though, is we're trying to figure out whether it'll make a new low or can it actually bounce back up. And you'll notice in some of these examples, there is some consolidation where it tried to rally and it just couldn't quite do it. That's actually what we're looking for in this market. Will it rally after filling the gap? Well, we'll take a look at that soon. Let's have a look here as well at things like all of those big stocks that we were just talking about. Look at this. Starbucks down, huge. You can see consumer cyclicals, consumer defensives. I just want to show it again. It's a massive sell-off kind of event here in terms of what's going on in these American consumer style markets. Not good at all for them. Let's move over here to the VIX, and the VIX is big spike on it, 31 almost here for the fear index, and you'll notice that it came up pretty heavily here. We're not quite at 35 territory yet, max fear, but we certainly did jump incredibly over that last 24 hours. PCC, as we expect, would rise. So that means that there was a lot of puts entered back into the system. Put rate was much higher than call rate. Again, could be leading into the third week here. Remember, we're about to expire one of the most important options expirations for every month. And this means that there's a lot of shenanigans going on here into such a massive expiry such as this Friday. Let's look at the dollar index. Well, it did actually exactly as we suspected. We knew that if we broke this level, things would occur. But as we said, that once that actually broke through, we expected a bounce. And that bounce possibly up to around this 104, 10 to 20 kind of area. This is the next area where we expected to find some weakness. Now, if that's occurring and money's floating back into the dollar index, if we expected to find weakness here, which we do hope does occur because that's the most likely scenario here, if that does occur, does that mean money is going to come back into bonds and back into the stock market with risk on? Well, that's certainly the question mark, but this is the big level moving forward, and anywhere around where it kind of stopped here is plausible for the market to actually move over and for the DXY to weaken. If that does happen, could be a good sign. Remember, watch dollar index at the moment. It's quite important to these markets. Gold, another one that we're starting to get a little bit more bullish on, actually held really, really well. So we saw it come off that massive demand zone. For anyone that hasn't been watching the videos, scroll out this demand zone. You'll see it over here. Heaps and heaps and heaps of buyers. A defended area previously back in 2021 all the way to 2022. And it got defended again at this stage. So it's looking better here in terms of gold and the action. Let's take a look at how it looks on the charts. Little bit of a double bottom here off the trend line. It did smash through that trend line down. So you can see the trend line down getting taken out. It's now hovered over that and it's created a little double bottom here with a small rally. I'd hope that this can hold up. So basically what that means is somewhere around here, you would really hope that gold can possibly do a turn. And remember, this is gold versus the US dollar. So it's holding comparatively very strong. US dollar's moved up. Gold has actually held in the last 24 hours of trade. And that shows me that there's some buyers here for this metal. People are starting to go into silver, and silver and gold are both on their knees. So certainly worthwhile. And that leads into things like the US 10-year as well. The US 10-year dropped. Again, that could be a positive for the market. And if it keeps dropping and goes under this, and this, especially this area over here, the 2.75, I think that gold might come good. Remember, people see it as being a currency that is an inflation hedge. Usually the way that gold kind of works is it's more around the cost of holding as well. So you've got to consider that. So if the cost of holding comes down, often gold will fly. If you don't believe me, you can look at some ratios out there. But yeah, here we are. And if we're in either stagflation economy or a dropping 10-year, that will be positive towards gold. So at this stage, you can see where it's holding up. Needs to breach this, and I hope it can do so. Let's move over to US oil. Well, unfortunately, our fears were realized there in the last 24 hours. We fell from the resistance zone. I know it looked like a breakout, and I talked about this area being the biggest zone of it. It did fall from that area. It's trying its best to roll reverse right around here, but I think any pickup here from something like oil could be dumped. Remember, OPEC is still having its little shenanigan games here, but overall oil still unclear to me, if not down. And that's the way I'm looking at it on these charts. Taking out this demand here is a fairly large deal though. So if it just you can see it kind of sprung back through there, I'd expect some growth, possibly some dumping at around this stage. So be careful here on the oil trade. Lots and lots and lots of false breaks going to happen all over the place. Natural gas is kind of similar. Again, it's come up to a level where I've been targeting a potential short between that 61.8 and 78.6 fib. It hit the 78.6 fib, created the long leg doji, and now is rejecting. Still kind of looks like, with these aggressive moves on natural gas, that it might be coming up and possibly rolling over. So be careful here in natural gas. I know a lot of people are bullish. I'm not so sure. Time will tell, but certainly the prices are around that area where I expect bears to potentially look to come back in. Let's talk about Target, the elephant in the room here. Walmart, Target, all these other staples. Yeah, it was brutal. Look at that monster sell-off, 25%. That's a big deal in Target land. And if you bring it up for the weekly, you can see here how big a deal that is. Now, we're not back to 2020 prices before the pandemic, but we certainly have dropped substantially. And this is the kind of brutality that's going on in the markets right now. Not even a defensive like this is safe. Doesn't mean buy the dip. I just wanted to show it to you to show you the American consumer and the sickness there. And when we talk about the American consumer, I've given you this lead indicator a few times, XLY versus XLP. This shows you 1/3 of the US economy, effectively whether the American consumer is healthy or sick. And at this stage, quite sick. It's been since November, very, very poor. And what this is really telling us right now is that maybe we have based, that is, the stock market also could have based, and we might be seeing a little bit of a mixture of potential risk on, that is XLY outperforming XLP. After a day such as the horror and shock of what we just saw with Target, Walmart, etc., I can see why. But this is an area where I'm very, very interested in continuing to watch this particular lead to see what the risk on, risk off of markets is. Tesla, as we mentioned, fell. Bit of news. It is in the demand zone still. You know this 700 is a huge level for it. It was bought monstrously before over here. It's been bought again. And at this stage, it's back down. If I was looking at this on a chart, you can't really make any bull case scenarios for it just yet, other than saying it's in demand, because it's making a series of lower peaks or lower highs. It's kind of weakened into this event. So unless the market can ramp and get past 760, it doesn't necessarily look awesome for Tesla. A lot of people will be trying to buy this dip. I don't blame them at 700. I totally get it, but we're not through, some of these levels first. So we'll continue to watch it, and we want it to do something like this, form a beautiful accumulation zone. Could that be max pain? Hopefully it is for investors of this particular stock out there. And if it is, then we move up, we do something like this. Guess what? We've got our potential Wyckoff accumulation moving forward. So that could be something we're looking for. Apple's back into demand as well. Big demand zone here. Obviously, no one wants really Apple underneath this zone. If it does happen, expect the markets to get brutalized. This is the biggest stock. Therefore, if it weakens past this point, where's the next area? Unfortunately, could be around a 125 for Apple. So big 24 hours here for it. It did look pretty weird the previous day with this candle here. We were hoping that it didn't come back down. Well, it got brutalized. Again, we go into something like a 1 hour chart, have a look at it. Not much to go off here. It's filled any little miniature gaps that it had left. It's come back down. Efficiency is back. And now we find potential base. I would expect that the next 24 hours, hopefully the markets can rally and find some kind of buying pressure into the Friday. So the Thursday and the Friday find buying pressure. But this, imagine if it does something like that. We get that base, we rally through. Would that be good? Yes, that would be certainly a much better case here. And the more it accumulates, it's not a bad thing accumulating around here. Remember, if this occurs, it's really just Wall Street picking up and accumulating positions and trying to flush out retail traders. So hopefully it can hold this range. Time will tell, and certainly it's at that support. DAX hit that resistance. Obviously we had our bit of a downward trend here that had been stuck for a long time. It looked like it broke out, couldn't quite deal with these equal highs over here, or this very, very clear resistance on the horizontal, and it fell back down. So DAX, unfortunately, is back through. Let's have a look if it should fall further. So there's a little gap range here that it never really truly got through. I think that could be something that's interesting for the DAX traders. It looks like it's just falling off a cliff. I'll come back to this one. At this stage, could fall a little bit further, maybe 13,723, and then it finds some buying pressure. It's right around the first area, but anywhere in this gap range here could be buyers coming back in for the DAX. IWM, as we mentioned, held a lot better. Let's look at this on the 1 hour and just quickly consider this. So it's actually held very, very well. Bought off the bottom here at 169.50, went all the way to 182, which is a big gain. I mean, you look at this to here, that's a big gain, 8.1% on the index. Then it's bounced back down, and we were hoping the whole time for this move. That is a move from the bottom to around this zone, 188. It's still very possible, and it is back in our area. We haven't quite filled the range here, but I'm not sure if we even will. Of course, IWM showing that the street is prepared to hold the more beaten down stocks. Remember, these stocks are the most beaten in the market. So it's prepared to hold them at least for now. Very interesting there. Let's see if that holds up over the next 24 hours. Because if it does, and Wall Street continue to hold up these smaller stocks, it could mean a little bit of risk on in the growth and hyper growth sectors. we'll be watching that. Nasdaq filled the gap perfectly here. There's the gap range, huge fill all the way back down to 11,900. It's down there a little bit further now. It's sitting around this 830 area. Again, if we think about it now and we put a horizontal here, we know where our little kind of max pain was formed, that slight high over here. No way did it want to go there. It just kind of bounced straight through. And if you're trading the last 24 hours, really once it got under here, it broke the sequence of making higher lows. And unfortunately, when it broke that sequence, it kind of triggered all the shorts. The algos got in and they dumped this market all the way back down to gap fill. And that's something I did mention in the private rooms. I was talking a lot about the S&P, which we'll look at in the section. And realistically, that's where it was. It was right there that the weakness started ensuing. And of course, here again, once it got through there, wow, gap fill was almost imminent. We need to hold up above these lows at this stage, 11.7. If it closes a weekly underneath there, I don't know really what to say in terms of this looking bullish, because at that point, you're talking about some serious negativity on these markets. And remember, that will put us, if we get another weekly close down, that is, another weekly close down, that will be 1, 2, 3, 4, 5, 6, 7. That'd be incredible. That, remember, 8 is the maximum it's ever done. So if we got 7, that's getting close to the maximum amount of sell-offs ever in the stock market, almost breaking history. And that's something that's incredibly rare and not usual. So I'd still expect a potential turnaround here story in the Friday session at least, if not the Thursday session. S&P 500, the most important index to be looking at right now. Again, there's where it fell through that 40-40, made a new low. Once that occurred, weakness ensued. The second level was just nothing. Nothing was there. There was no buying. There was no small time frame, anything really. And just fell straight through and filled, of course, that giant gap that we've been worried about for a little while. So that got hit. The market's coming back down. Again, we've got a huge amount of weeks in a row. We could count them. We could do all of those types of things. But what we're really looking for here is some form of base accumulation. Remember, when markets drop, e.g. here, or when markets drop, usually not what a lot of you used to over, let's say, the 2020, 2021, in general, they don't V-shape. They don't just go, whoa, yeah. They do more of this type of thing. Float around, trapping people into insecurities and all the things that are wrong. And then they tend to bounce. They do more of this. They don't always do that. They do more of that kind of thing. More of that. So yeah, these types of markets are normal. These types of bottoming effects are normal. And that's what we kind of hope this is if you're a buyer. If you're a seller in the markets, well, I think you'd be probably pretty happy with the last 24 hours, though we're at a point now where you've got to just admit there could be bulls around here. So until you clean this low, you can't really be sure that there's not going to be buyer demand coming back into this market. And I think that's pretty obvious for most people out there. US 500, just to show you the key levels, here's that one that I was talking about, that 40-40. It cleans that. Once it does that, it's going to move to the next level, being that 39.90 area, and it just absolutely shellacked it. Look at this on the small time frame, just got destroyed, bang, straight through. Well, then we go to gap fill, and that's exactly what did happen. And unfortunately, this didn't hold up. The series of higher lows didn't prevail. And once that didn't happen, the bears got full control. The algos went psycho, and of course, margin calls ensued past that point as well. Let's take a look at the max pain. So max pain for the last 24 hours was 405. Obviously, they didn't get that perfect. They closed the market underneath the 400. I guess that's something that, you know, is going to happen. But in terms of the amount of options that were open, it pales in comparison to what's going on this Friday. Look at the Friday close, guys. 110,000 open orders sitting around some of these strikes. So 370, 380, 390, and 400. Huge levels here. Would the market like to bounce above 400 by Friday? You would certainly suspect so. But at this point, yeah, it's a huge level here filled with puts. So the next 24 hours is going to be pretty important. I think bulls will try to come and defend themselves. If they can't, well, then you know the bears and the market is really flash crashing here. But at this stage, hopefully it does come through. And I think it's going to be a big, interesting day trading session. Max pain set at 423 at this stage for the Friday close. I don't know if it'll get there, but certainly to defend something like these puts sitting at 390 and 400 seems more likely than not for this market, at least from the statistics. Let's move over to Bitcoin. Bitcoin holding its low, actually did pretty well to hold up in the last 24 hours. It's defending as best it can. You can really see that defended zone here starting to play out. And if you're a Bitcoin buyer, I think this is all chop, and really the big key level is 32,000. But if you're looking at it, maybe if it creates like a little double bottom off this small zone here, possibly that could see some buyers up until around that 30,500. That would probably be the biggest thing over the next 24 hours. Ethereum also holding up as best it can. It's kind of topped over a little bit. Remember, Bitcoin is the one that most people go to. Ethereum is the second during these types of fearful events. And at this stage, it's just doing its best to hold. And if you look at the 1 hour, it's kind of similar to Bitcoin. It's holding, but see how it's fell a little bit lower? And that's because the only one that really people try to buy into during fear is BTC. That's one that holds up the best. It's like the SP500 of cryptos. If you haven't already, come follow us at FX Evolution on Twitter. And realistically, there's not too much extra news coming out. So the markets are going to do what they're going to do. They're going to be allowed to make these moves, and hopefully the bulls can come back in for a lot of you and defend the next 24 hours. Bears, this is a zone where it starts to get a little bit gray because, of course, we've seen this defended area before. 3860 to 3900 is a big zone here for the S&P. And yeah, I think there's a lot of fights between the bulls and the bears in the next 24 hours. Remember to subscribe, smash that like button, guys. We'll see you in the next one. Bye for now.